What's going on, guys? This video is going to be for my buddy Bob here. Bob kind of rearranged the chart, so now I scaled it down. We can see the price on the right hand side. We should be able to see the time. It's going to be in Pacific Standard Time. We can see that price, or excuse me, that time down at the bottom. Only other thing that's down at the bottom is the ATR. Again, disregard that. But what we're looking at here, we're going to look at yesterday's price action. We're going to go over that strategy that a lot of us in evolution traders have been talking about. A lot you can see in the 20 play automation algorithm bot that we're kind of working on. A lot of that conversation there. We're doing some back testing on using the 2-minute time frame, using a 5-point take profit, and I kind of want to go over some of the the parameters, right? Some of the things that I'm looking for, how I'm necessarily taking these trades. So I'm doing some forward testing on a couple of different prop firms, doing some forward testing on a funded account, doing some forward testing on a prop firm evaluation, because I want to see the difference on how I'm going to be able to manage the drawdown, manage the losses, and manage the days where I manage to take a couple of trades in the green, and then learning kind of where I need to stop myself out at. So yesterday's price action, all we're looking at, 2-minute time frame. Okay, 2-minute time frame. We're looking at the black box here, initial balance. So that's going to be that first hour of trade from 6:30 in the morning to 7:30 in the morning Pacific Standard Time. Again, you guys know that I'm on Thinkorswim charts. The arrows is nothing more than when I right click on Thinkorswim, go to edit study. All I'm going to do is show breakout signals, make sure this is on. Okay, that's it. Doesn't do anything, doesn't help me get into trades, doesn't automatically put me into trades, doesn't do anything other than draw my eyes to where price closes over under the 20 SMA. Okay, so you can see here off the open 6:30 in the morning, we get a first candle that closes over the 20 SMA on a 2-minute time frame. The high price is going to be sitting at 20,208. So we're looking to get in on a following candle. I would prefer it to be the next candle. Okay, but I'm open to waiting 2 candles to get in. Okay, so again, that's going to be dependent on the trader. That's going to be dependent on your risk. That's going to be dependent on whether you would like to do that or not. Okay, so first trade here, 6:30 in the morning. This is our reason why candle. Okay, it's a 25-point range candle. This is a very, very large candle for a 2-minute time frame. Again, this is off the open. So maybe you can build it in, right? To everyone out there listening, maybe you guys can build it in to where maybe you sit out, right, for the first 30 minutes. Maybe you sit out for the first 15 minutes to kind of avoid some of these big ranges and volatility. If you are looking to take trades this early in the morning, just understand that they can snap and go against you. Okay, what I'm doing and what I'm testing right now is setting a hard take profit. So depending on your broker, whether that's an ATM strategy, whether that's setting, with Top Step X, you can have a certain dollar amount where if your trade hits X dollars, it's going to automatically liquidate that account or liquidate that position and close that trade. Okay, I do not, when I'm running this, I do not manually mark it in and then manually try to sell at 5 points. That's going to create a cluster mess of being late. It's going to create a cluster of trying to hold for more and then watching it pull back. Just listen to what I'm saying. Have that ATM strategy, have that hard limit order for when you manually enter. Again, I'm always mark it in, mark it out. Okay. Now, the question has always been asked to me before. Well, when this candle closes, can you drop a limit order here over the reason why? Sure. I don't do that, but you can do that. Okay. If that's easier for you, do it. If not, mark it in. Okay, so I mark it in on the following candle when we confirm the top of the range. Now again, what's my stop loss? Again, this is what we're testing here. Okay, this is what we're testing. As of right now, I'm using one of 2 things as a stop loss. Okay, depending on the range, I might use half the range, so I might give up 10 to 15 points. I might use a close back under the 20 SMA. Okay, or if the range is small, I'll use the bottom of my reason why. Now this is what I'm testing. This is what I need to figure out what's going to be the best and most profitable over a series of 100 trades. Okay. However, as of right now, what I'm doing is when this confirms, I'm entering into the trade on a market order. I'm having that hard 5-point take profit. And as soon as, okay, we hit, it's going to autofill that position. So that the high price is 20,208. This runs up to a price of 20,213. Now, even though it does pull back and this candle closes red, you would have gotten filled on the spike. Okay. 208 to 213 is exactly 5 points. You would have immediately been filled on the spike. Okay. Now, if you entered a little bit late, you would have been filled on the next 2-minute candle here. Okay. Now, the short position. This is a 28-point range candle. Remember what I said about those first 15 minutes, those first 30 minutes of the day. You're going to get big ranges here. Okay. So just keep that in mind. The low price here is 20,185. Next candle goes down to 20,182. Does bounce a little bit on you. At one point in time, you would have been in from 185 all the way up to 198. You're going to see here that you're going to be in almost over 10 points worth of drawdown. Okay, so this is where position sizing is going to be key. This is where risk management is going to be key. Because after entry, this is going to go against you 10 to 12, 10 to 13 points. Okay, so keep that in mind. The following 2-minute candle goes down to a price of 20,180 from a price of 20,185 entry. So you would have been filled on this candle here for 5 points. Okay. Next setup here is long, never confirms, no trade. Next setup is short, and that happens at 6:58 in the morning. Okay. 6:58 in the morning. That price is 20,175. On the next 2-minute candles goes down to 20,168 at 7 o'clock a.m. Pacific Standard Time. So from 20,175 to 20,168, here's the next trade that would have been filled for a winner. So you can see here, this first trade was a winner. Let's say you're playing one mini contract, okay? You're taking 5 points. This is a $100 trade winner here. This is a $100 trade winner here. This is a $100 trade winner here. Next setup is at 704. Okay, 704. It confirms at 706. Entry price should be over 20,198. Goes up to a price of 20,205. Here's another $100 winner here. 1, 2, 3, $400. Now, the testing that I'm doing, the things that I'm trying to figure out here is what's a good opportunity and what's a good place to stop at, right? What's a good, always, stop loss, right? I'm not going to know what the perfect stop loss is for me, whether that's a close back over under the 20, whether that's using the full range and giving myself a super huge risk for a small reward, but in hopes of hitting at 70, 80, 90% of the time, or keeping that maybe I do a 2-to-1 where I risk 10 points to make 5. So it's only going to be 2 trades to get me back to one trade to get me back to scratch, 2 trades to get me back into the green, right? Or whatever, right? 2 trades to get back to scratch green. So that's what I'm testing right now. Again, I'm kind of playing with those different risk to reward parameters. But so far, in the past 3 days that I've done this, it's hitting at over 85%. It's hitting between 80 and 85% of the time. You're able to, on these setups, get at least 5 points. Now, the hard part for the trader is going to be, when do you stop yourself out? Because if you hit 1 winning trade, if you hit 2 winning trades, you hit 3 winning trades, the brain is automatically going to think, well, I can just sit here and do this all day long and I'm going to make thousands and thousands of dollars. Wrong. Okay, wrong. Because you're going to have areas and you're going to have points in time intraday where the market gets extremely choppy and you might take 1, 2, 3 losses and you're going to give back everything that you did in the morning. So what I'm trying to do is maybe run this, right? Maybe run this from a little bit into the pre-market into lunch hour. Okay. So that might be from 6:30 my time to around 9 a.m. Okay. And I wanted to really test trading during those hours. So if that's the case, then I would have also taken this trade here at 740. Also hits for another $100 on 1 mini contract. I would have also taken, based on the setup, I mean, technically speaking, this long does come into play here, but it doesn't happen for 1, 2, 3, 4 candles later. So maybe this one gets taken, maybe it doesn't, right? Again, typically I like to see my confirmations go within 1 to 2 candles. But again, with the day's low here, not taking out the swing low, trading over the 20 SMA, maybe, you know, a trader takes that. So this is probably going to be my last trade, would be here, right? And this time was 7:40 PST. So that would have been 1 trade taken, 2 trades taken, 3 trades taken, 4 trades taken, 5 trades taken, 6 trades. This would have given you 6 trades before lunch for 6 winners. Now again, that's not going to happen every day. So when that loss comes, right, let's say it was 4 winning trades and 2 losers. How can I make that to where I stay profitable? So maybe if I start off with 1, 2 winners, maybe I go from 1 mini contract to now on the 3rd trade. Where's the 3rd trade? The 3rd trade here, down to 5 micros. And then if I win this one, maybe I go 3 micros. 3 micros, right? So that way each trade that I'm taking later on takes off more risk, more risk, more risk. That way, in case it does lose, you still protect the gains that you have. Now, if you just simply, you know, take 1 mini here, 1 mini here, and let's say this one loses, wins, you're kind of just scratching the surface at break even. Or I could see how a trader wins 1 here, wins 2 here, doubles the size here, takes a loss, gives everything back, and now is in the red. So the position sizing has to be the same until you build a cushion. If this first trade started off as a loss, I'm not opposed to taking 1 more, but if I lose 2 in a row, I've got to stop. Okay, I've got to stop, because that's probably more than likely going to be anywhere between $200 and $300 worth of loss, and I don't really know how much I want to push it. Again, for myself, again, I only can speak for myself, I have about a $400 to $500 daily loss limit for myself. So if I go down $400 to $500, I'm going to call it quits on that one particular account. Either move to another account, go trade an evaluation, or do something else. Hopefully this video helps you. You can see the times down here. You can see the price on the right hand side now. I hope this chart looks a little bit better, looks a little bit cleaner. Let me know in the comments, Bob, and I'll see you on the inside.